What's up, guys? I am Dominique, and welcome to the Domino Effect on this channel, where we provide all free courses and training for you if you are in business, if you're a woman-owned business, if you're a veteran, if you're looking to grow, if you're looking to scale, if you're having trouble with getting funding, and if you're sick and tired of wasting time just applying randomly online, then this is the place for you. So go ahead and hit that like button, hit that subscribe button, and that share if you find the information on this channel valuable, because that is exactly what we do here, is we are helping to create more owners by helping you guys get funded. And in today's training, it is absolutely crucial, you guys. We're talking about MCAs, okay? Merchant cash advances, short-term loans, high interest loans, right? A lot of people can fall into what we call here at DFX a debt spiral. And guys, I don't want you guys to be part of that trap. Okay. So, like I said, go ahead and hit that like button, that subscribe button, so I can go ahead and continue to make more free courses and trainings just like this one. Now, let's get into it. So, a little bit about us here, what we believe at DFX. We believe in you. Okay. We believe in us. We believe that business owners are the shit, right? You have resilience and grit, and it's tough to keep failing and failing and failing over and over again, and yet getting yourself back up, right? So we believe in you. We believe businesses owners are the shit, but also your funding options are limited, right? For women, for veterans, it is a hard game to play out there if you're not really sure what your next move is going to be, right? So where does alternative capital come in? Well, it steps in as the best resource, okay, for your business, for 90% of businesses. So DFX is the best source of financial literacy and funding. DFX is our financial literacy and referral funding platform, one-stop best offer. Guys, free application. Schedule your one-on-one session. Call 888-488-4145 so you can see what your current blueprint is, okay? Now, let's talk about the problem, okay? The problem here is huge, right? 80 to 90% of businesses are not going to be able to get funded at the bank, especially if you're a startup, if you have challenge credit, if you don't have a lot of revenue right now, it's going to be difficult for you. And if this is familiar, then go ahead and send me a DM or drop a comment, right? Like, this is common, you guys. So business owners can do a lot of things. And I met many amazing, amazing companies, right? Women and men and new entrepreneurs and established entrepreneurs and all kinds of industries at all different levels, all doing different things that are just have crazy innovations, right? But they need money. They need money to get to the next level. And that's holding a lot of people back, right? They have an opportunity that they can take advantage of, or maybe they're in a situation, a hardship, something, anything can happen, right? We know what happened during COVID, okay, guys? And so a lot of times when we're going into the bank, typically if it's a bank that we're already with, they're turning us down, right? If you're getting turned down, you might not necessarily know what you need to do next. So that's a big problem. Now, I want you guys to change your mindset. That's my goal here today of this class and of this training. So I need you, first of all, to make sure that you're grabbing a pen and a paper. Go ahead and drop the name of your business so we can give you a shout out as well. Okay, guys? But let's change our mindset here. And just because you've experienced barriers and you may have experienced rejection with getting funded so far, you can still do this, okay? You can still get your business funded. It's 100% possible. Getting business financing, every business needs it, right? So today we're going to go into preparation because the power is in the preparation. That's what I like to say, right? So the power is in the preparation. Know if you qualify before you apply. Okay. There's a lot of strength in that, right? Now, we're going to go over the different types of loan products, and then we'll go over what programs you can use to scale if you don't qualify for direct funding as of right now, and then how you can get to your next steps. Okay. So every business is going to need money, right? Even nonprofits, but it's not just going to come out of nowhere, you guys. You have to understand that even though you may need it at that time, it doesn't mean it's necessarily going to happen. And I hate to say that, but we have to be honest with ourselves, right? It's not all just about personal credit. I can give you an example of a company that had great cash flow, decent collateral, really good personal credit, and had terrible business credit and got turned down for a loan for a bank that they'd been doing business with for 15 years. And they were doing in the multi-million, but they never even thought about, things like their business credit. So don't be hesitant, right? If you don't qualify for direct financing right now, there are other, options for you. So there are ways that you can get financing. I mean, you can sell off a part of your business. There are free-ish sources like grants and crowdfunding, especially for women, especially for veterans. But when you go down that route, you guys, you are going to be spending a lot of time, okay? And then there's typically some type of collateral or some type of security required. But when we talk about collateral, there are different forms, right? There's real estate that you can use as collateral. You can use your receivables as collateral as well. But you can also convert your cash advances, right? If you're processing credit cards. So you're using business assets, right? Your collateral. So this is what I'm talking about, right? The accounts receivable, real estate, commercial real estate, a book of business, equipment that you own, if it's heavy equipment, if it's, trailers, things like that. If you have a store with auto parts, you have 700,000 in inventory. Okay, you could borrow against that. That's your receivables. You could get a line of credit against your receivables. So when you're ready to get business loans and you want to make sure that you're ready to leverage those business assets, because you can take advantage of that even if you're a new business, right? If you have some cash flow coming in, then that's something that you can leverage. So use your merchant cash advances as collateral. So what we're talking about here is net 30 terms. So this is where you're extending credit, right? They're going to extend credit to you. You have 30 days to pay it in full, unless they do like a net 15 term, right? Or a net 60. But it's the first step to be able to build business credit if you're starting with like a tier 1 vendor. You could get net 30, you could get 60, but if you're a business and you extend those terms, okay, you could do that as well. You could offer your customers a month to pay you. That could give you a real competitive advantage above other people. One of my mentors, actually, when they had their business, they got a leg up on their competition by going to the clients and saying that they could deliver the product sooner, like 5 days sooner, right? And not only that, by delivering it 5 days sooner, they were going to get like $40 more. They were going to save $40, something like that. Give them some time, right? Those things like that could be literally the thing that sets you apart. You have to think about the fact that you are also probably setting yourself up to wait, for that money. But merchant cash advances can step in and fix that. There are other things like factoring that can fix that as well. But if merchant cash advances can do that too. A couple of things here. MCA is not a loan. Basically, it's a cash advance against the credit card sales of your business. Any business can apply for an MCA. You have an advance that's deposited into your account. It's typically a percentage of what your monthly revenue is, and you can offer this on a net. It can be offered on net 30 terms. You don't have to, if you are waiting on net 30 terms, is what I mean. If you're offering net 30 terms, then you're not having to wait a month to get paid. So merchant financing is really great for businesses that accept credit cards. If you're looking for really quick, really easy financing, it's designed to help you with getting funded, but it's basically based on your cash flow. Okay. So you need to make sure that you're depositing into your accounts. You need to make sure that a couple things here, if you have a personal account and you're depositing your business funds into that account and transferring over into your business account, guys, that's not going to count. All right. So make sure everything is going directly into your business account. Okay. Now, when you're doing something like an MCA, lenders are typically not going to ask for, super in-depth documents, right? They're going to want your bank statements. They're going to want, they do want they do want to check your credit score. There's going to be a soft pull, and that's to, see your characteristics, see what's going on with you, right? But typically you're not going to be submitting like 1,000 documents, okay? It's going to be looking at the cash flow of your business and how you're essentially managing that cash flow, which is a huge thing a lot of people kind of overlook with this process. So when we're talking about merchant cash advances and cash flow financing, and we want to delve into some differences. All right, with merchant cash advances, they're going to look at your credit card sales, okay? And then with the cash flow financing, they're going to look at all of your cash flow. It's literally, they're verifying everything for your business bank statements. So let me get into this a little bit. With MCAs, okay, my suggestion is you really need to know what you're doing. You really have to have a plan for what you're going to do with the funds, because the goal is to not have an MCA for, a long period of time. You don't, because you're going to end up paying a lot. It's high interest, right? So if you have the option to pay it off early, even 90 days or sooner, you want to go ahead and do that, because it goes from like a 30% or more interest rate down to like a 3 or whatever's or something percent per month, right? But or 3 plus prime percent per month or whatever that is. So be advised of how you're managing that. So with your typical MCA lender, they want to see that you've been in business for 6 months. Cash flow financing, they're typically going to look at maybe a little bit longer. And when I say cash flow financing, I'm referring to like receivables and factoring, things like that. And so well, yeah, they're going to want to look at your bank statements. And let's talk about the bank statements really quick. You guys got your pen, you guys got your paper, right? So we have a lot of new, businesses that are popping up, new innovations, right? Banks like Novo, banks like Row, things like that. If you do decide to go with a bank like that, you also want to make sure that you're simultaneously banking with some sort of traditional banking institution, okay? Whether that be a regional bank, whether that be your community bank, your credit union, whatever, or multiple, right? Get in there and establish those relationships, put it on paper, because lenders find that, I'm going to tell you from the perspective of a lender, right, and the credit issuer, is because those are considered riskier, right? Sometimes they have difficulty with getting, and this is not a dog, okay? I am not digging them, okay? Dogging them, but typically it can be difficult to get a hold of somebody there if something were to go wrong. They're relatively new, so a lot of they will tend to shy away from that. So be advised of that, okay? But you do want to have your bank statement. So how can you prepare for that? Well, if you're in California, you need to make sure you have 4 months of business bank statements. So everything should be depositing into your business bank account, okay? We are in December, so that would be August, September, October, November, right? For example. So anywhere else, now we say that was 4 months, right? Because at a minimum, you could go 3 now, okay? But it's better if you have 6 months, okay? But with cash flow financing, we're going to look at your accounts receivables, your accounts payables. Are you letting clients, invoicing clients and letting them pay you 30 days later? Maybe you're working with Medi-Cal or something like that. Or maybe you have certain contracts or construction contracts and things like that, and you invoice. And so you want to make sure that you're keeping track of those, okay? And here's a bonus, guys. Keep track of, like, as you're moving through your top 5 biggest contracts, right? Just have that ready to go, okay? So with an MCA, you're not going to pay any interest. There's a fee, right? But you're not going to pay interest on that. Typically, they're doing like a factor rate, but you're going to pay a fee for the service, okay? Now, with the cash flow financing, you're going to be paying interest because it's a loan. So between the two, between MCA and between cash flow financing, MCAs, you can get away with not having the best credit score, right? So if you've got some challenge credit, if you've had some issues, you've been bootstrapping your business, right? We know how that is. Then in MCA might be an easier entry point for you. If you have a stronger FICO score, then cash flow financing, would be looking at that. It opens up better options, okay? If your personal credit is not so hot, guys, maybe you want to go with an MCA at that point. But let's get into the difference between business credit, merchant cash advances, and this cash flow financing. So cash flow financing, they're looking at your cash flow. Business credit, they want to see the setup of your business. Are you credible? Do you have a solid foundation? This is why I'm always talking about establishing your credibility and your foundation, because I've seen over and over and over and over again so many issues that could have been mitigated had we just had the information, right? You don't know what you don't know, guys. So once you have a paydex score, once you establish your business credit and you get it up and running, then they'll check it as well. Okay. So with business credit, starter vendors don't usually have a time and business requirement. You don't have to submit collateral. They're not really looking at your personal credit. So, but, they do want to see, now there's two aspects to the business credit that I want to dive into, and I believe that's coming up in my future slides. So I want to touch on it in a little bit with MCAs, right? Where they want to see that you've been in business for like 3 months, 6 months minimum. Business credit, that is, you could go and file your LLC, make sure all of your credibility and your foundational points are matching, and you can start getting business credit right away. So that is one difference between those three. But with the factoring, or, if we could do a line of credit against the receivables, then we want to see things like your invoices, your accounts receivables, your accounts payable, what's owed, right? We want to see your bank statements. They want to see are you managing your cash flow? Are you using your business for a lot of personal funds, right? Are you going to the liquor store? Are you going to the nail salon? Okay. So don't do that, by the way. All right, but that's what they're looking at. They're looking at, are you actually a functioning business? Do you know what you're doing? Can they trust you to actually give you money? Okay. So how can you prove that? Well, you can prove it by showing, hey, you know what? I'm new, but look, I've taken all the steps I need to do. I've got my license, I've got my EIN, I've got my DUNS. I'm ready to move forward. Everything's matching, and help me get funded. So with cash flow financing, you can typically get an advance on that, an advance on your receivables, 80% even. But business credit, you're not, you don't, it's not a loan, right? So the best thing that you can do when you're establishing business credit is pay it out of the profits, right? So if you have a job, right, you're a contractor, you're in real estate, and let's say, you need to furnish the inside, right? So let's say you need to furnish the inside, or for your job, you need to go into Home Depot and get supplies. Rather than taking out your debit card and using your debit card for those purchases, you should be putting that under your EIN, because now you have a strategy that is going to give you credibility with the banks in their eyes, right? Which makes you more attractive, which gets you better rates, which gets you better terms, and also essentially in the long term actually saves you a lot more time, guys. A lot more time, a lot more headache, because you're stepping back, you're seeing what the hell was going on, and you're fixing it, right? You're attacking it head on, okay? So with merchant cash advances, future payments to the business by the customers is the way that you pay back the advance. Typically with an MCA, you're going to have a weekly payment. That's what it is, y'all. Okay. You're going to have a weekly payment. Sometimes you might even have a daily payment if you're really challenged, right? If you've got short time in business, if you've got low revenue, okay, like 10K, then yeah, you are going to be looking at a daily payment possibly. Now, there are clients that we've been able to set up with a monthly MCA, but they're typically generating higher revenue. It's important that you know that, because a lot of people are like, what? This is a weekly payment? What? Yeah, but also it's a starting point for you, right? If you can't get funded anywhere else. But one thing I gotta say is, if you don't have a use for it right away, then you might want to take a step back. Okay. If you're gonna get it and you're just gonna like do payroll, and you're, something like that's probably not the best thing, right? But if you can get it and use it for inventory, right? Inventory that you're about to, you've got a big event and you're going to sell it out, right? So, or something like that, or your distributor's giving you a huge discount on some bulk inventory, and you can flip that. So that is something that is considered good debt, right? Because you can actually put the funding to good use. Now, if you don't pay your business credit cards, if you don't pay your vendors when you're establishing your business credit, it can really, really hurt you guys. So they keep track of this with some, that's the DBT. They call it DBT, days beyond terms, and it's important. So make sure that you stay on top of it, especially when you're new, right? Business credit is not the same as personal. So be advised, it's not the same thing. Now your interest rates are going to vary in terms of, like, if you're doing the factoring, or if you're doing a line of credit or something like that. And your interest rate will vary depending on if you decide to pay off your MCA early. So if you decide to pay off your MCA early, remember, you're going to pay a lower interest rate overall. Okay, we're talking about overall than if you term it out. So also, side note, better FICO scores, and I think we all know this, will get you better results. So you should simultaneously be working on getting your personal credit fixed. So your FICO score, right, when we talk about, like, let's say, for example, going into the traditional bank, right, your credit score is really important there, okay? When we're in the alternative finance space, right, we're looking at, and credit issuers and lenders they're looking at to see what your characteristics are, right? Like, what are you doing? Are you managing, well? Okay. So that's what they're looking at. Also, it really is helpful for what programs are available. So let's say, for example, you need equipment and you don't have the best credit, but you've got some cash flow, you've got minimal revenue, you're just starting, you could get an equipment loan, right? But if you've got bad credit, you've got no time, you've got bad credit, you've got okay time in business, but you've got no cash flow, or you do have cash flow, but it's not going into your business bank account, then that doesn't count either. So, guys, if you have any questions about this, just send me a DM or type it down below and I got you. Okay. That's exactly what we do here. That is why we have free courses and training. So, do me a favor, show your support, please, and hit that like button, that subscribe button, because this is important. Okay? Moving on. You should always, always, always be simultaneously building your business credit, no matter what you decide to do. So if you're going to be operating a business, you need to have business credit. Okay. Even if you're going to be getting SBA financing, which, by the way, if you are going to be seeking SBA financing, you do want to have business credit because that is something that they look at. Okay. So, but let's say you're going to get an equipment loan, or if you're going to get, a term loan, or something like that. Okay. Even if you're going to be doing that, even if you're getting equity investment, you should still always be establishing your business credit, because it is literally the biggest kept secret out there for business. You can use it for so many things. You can use it in your office, you use it at Home Depot, at Lowe's, you use it at Tractor Supply, and not only that, you build it up to a point where you have 14, 15 trade lines reporting, then you can access cash cards through the bank under your EIN, certain cash cards through the bank under your EIN. So for a fairly new business that can't get funded anywhere, business credit is going to help you. Why? Because vendors are going to extend you $500, $1,000, $2,500 worth of credit that you can use to get office supplies and staples and whatever else it is, branding. You want your branded material. Okay. You can also build it up to where you're able to get discounts on, all kinds of stuff. Okay. But MCAs can be a good way to go if you do have a purpose for them. So just remember that. Now, if you have a longer time in business and your cash flow is stable, or even if you show that you're growing, that's great, right? It's a great bonus. And then it can open up more options for you as far as factoring, things like that being an option. But MCA gives you some fast money. So, but you got to be careful, guys, because there's a lot of predatory MCAs. I've seen a loan that was at a 68%. Okay, that's crazy, y'all. Okay, that's just crazy. And that's the end of today's course, guys. Today we talked about something really crucial: MCAs, merchant cash advances. And you need to know this, because when you don't know when you don't know what you don't know, you can be susceptible to really, really, really high interest rates that lead to a path to nowhere, right? Just stacking and stacking and stacking and stacking MCAs will take you down a debt spiral that is often difficult to get out of, can bankrupt your company. All kinds of things can happen when you do that. So I hope you had your pen and your paper, because we dropped some gems today as far as options for you. If you have a purpose for an MCA, if you are going to put it to good use, okay, you sat down, you have a plan for it, and you know for a fact that you got a pretty good feeling that this money you can pay off within 90 days, I'd say you got a pretty strong reason for getting an MCA. If you're a little bit on the fence about it, then I highly suggest maybe waiting just a little bit if you can. Simultaneously, always be building your business credit, because especially if you're going to be eventually seeking SBA and bank financing, which is exactly what we do here at DFX, helping you transition over to the bank and to the SBA, you want to make sure that you're also having that business credit profile, because it just makes your package so much more robust. So women and veterans, this is often information that unfortunately we don't have access to. And it's exactly why this channel was created. So if you found this information valuable, then do me a favor and hit that like button, that share button, and that subscribe button. Now, also, if you do have a 680 credit score, and this is one little bonus I want to give you before you sign off today, don't necessarily feel like you have to run in and get bank a business credit card, right, through a major bank under your personal credit score right away. Sit down and write out what are you going to be using your expenses for? Because if you're just going to go get a business credit card under your social, right, you're going to tank your 700 credit score purchasing supplies that you don't need to under your personal credit score. So don't mess up your DTI, don't mess up your utilization. Do not put car purchases under your personal if you are going to be, building a fleet, if you transport, if you drive and you have gas, you need to put gas in the car, right? So there's no reason why you should not be able to give yourself some more flexibility and leverage here, which is exactly what we want you to do. So go ahead and hit that like button, then share that, subscribe, so I can continue to make more free courses and trainings just like this one. See you next time.